Hello, my name is Benjamin. You're watching Benicarus Trades. Welcome to the show. Today is December 19th of 2023, and this is the Financials Markets Wrap-Up. So again, we do have a fantastic day with a ton of gains for the major indices such as SPY, QQQ, IWM, and the Dow Jones, of course. And I have chosen a little bit of a provocative thumbnail for this video because I felt like I want to talk about something a little bit controversial. So the markets are up, and of course, congratulations to everyone who is still in the trade, especially in the small caps and mid cap stocks that are catching up a lot. Now, look, the thing is, inflation is really taking a toll on us, on everyone. I can feel it every day when going out to a restaurant or just doing some grocery shopping. It's almost sort of painful now. It's certainly been bad this year and last year. Energy prices were up a lot last year, not so much this year, but still, like, going out having a meal is considerably more expensive now than it was just like 6 to 9 months ago. And it just doesn't feel very good. And the reason is because I feel like we are all working so much nowadays. We really are kind of worn out, and especially towards the end of the year. And I get to talk to a lot of people, clients, business partners, and so on. And I have the feeling that everyone is a little bit on the edge right now. So, I mean, basically the only problem here is that we are not all rich, right? Because if we were, that would be not so bad of a time. So what I mean by that, even if you just caught the bottom, let's say you have $1 million or euros in the bank account and you caught the bottom and put it all on the SPY, you would have made a nice 16%. On the QQQ, it would be even better. You know, you would have gained 20% almost. Let's say on a $1 million account, if you would have all put it on the QQQ, you would have made almost $200,000. That's more than most of us need for 1 year, even if you subtract taxes. So, you know, everyone who has a substantial amount of money and is in the markets really doesn't need to fear all that much. And the issue is, during the COVID pandemic, there was so much money printing going on that, you know, the markets and the people all were flooded with cheap money. But at the same time, for the most part, it benefited the rich people. Especially the stock market rally in 2021 and 2020, well, let's say 2021, was just so good for them. And now we are kind of experiencing the same thing. At the same time, we have consumers not being as good in a position as we were just maybe a year ago. Like, for instance, the INTC reports that 62% of Americans are living paycheck to paycheck, as holiday spending, credit card debt rise. And that's a number that went up to what it was just a year ago. I feel like it's the same thing here in Germany, where I am based, and probably many other countries as well. So during the COVID pandemic, we basically were not able to spend all that money. And also we had a bit more time on our hands. But now that inflation is hitting, all the savings are basically now gone. I mean, demand was strong for the most part, and it still is, but we all have to be more careful now. To a rich person, of course, that's not that much of an issue, because they can still participate in, you know, for instance, in the stock market and make some really nice substantial gains. But what about those who are not able to do the same thing? And that's kind of like the sucky part of having cheap money being printed like crazy. For the most part, yes, in the beginning it does benefit also the lower income people, but in the end, it's only the lower income people who are paying the highest price for all this cheap money. That's why I'm not the biggest fan of these COVID pandemic subsidies that were going on. But even though I believe it was right, the worst thing was this close to 0% interest rate period that we had, not just after the pandemic started, but also in the decade before. All right, lots of rambling again. Let's get back to our financials market wrap up. And of course, I wanted to also show you what was going on today. We had Accenture, FedEx, and FactSet Research all reporting earnings today. Well, after hours, it's down 7.8%. And it's just half an hour after the markets closed. So we will check it out tomorrow maybe and see what was going on. Then we have some economic data coming out. CPI in Europe year over year was 2.4%, which was the forecast, and 0.5% lower to the month before. And in the United States, we had building permits of 1.46 million, which was a little bit less than what was the forecast. Now, on another note, I wanted to say that again, it's a crazy day up, but also we do have an extreme greed going on, and that's also a contrarian indicator that, you know, it might be over soon. Usually when we hit extreme greed, that's an indicator that you should be very careful if you plan to going long. Of course, this can still continue for quite a while, but the odds are not in your favor, in my opinion. So let's check out today's performance. On a sector basis, we did have everything in the green, but technology was the weakest, while basic materials and energy were going up quite a bit. The futures had coffee and palladium rallying a lot, as well as heating oil, natural gas, crude oil, and gasoline. On the losing side were rough rice, orange juice, soybean, canola, lean hogs especially. On an individual stock basis, again, this is a very green map in my opinion. Today, Tesla especially rallied of the Magnificent Seven. Apple went up as well, Microsoft pretty flat, Nvidia pulling back a little bit, Google and Meta advancing, as well as Intel. So let's check out the charts one more time. For instance, the SPY, the QQQ, the IWM, and the Dow Jones. They're all hanging out at the Bollinger Band, which is something that I am not the biggest fan of. I want to at least wait for a pullback to somewhere between the 18 moving average and maybe half of the way between the Bollinger Band. And this hasn't happened in quite a while, but I really don't want to enter this trade, even though it is locked in from a stochastics standpoint. The same thing is true for QQQ. In my opinion, it's not the wisest idea to buy into the stock when it's at the Bollinger Band. The IWM is even worse. It's absolutely parabolic and I'm not really feeling it. The Dow Jones may be having a little bit more room to go, but then again, I mean, usually everything has to be over at one point, let's say. The 20-year treasury bonds are kind of flat today. this might be another opportunity to get in. Maybe, I'm not so sure about it. And the stocks here, we can see there's not too much red happening. Of course, some of the stonks are getting beaten up again. For instance, Mullen minus 20%. Let's check out the TANs, which is solar stocks. Enphase having another blast. I don't know how this is even possible. I mean, the FOMC meeting and Fed Chair Jerome Powell were talking sweetly, yes, but is it really granting a rally like this? I'm not so sure about it. So let's have a look at Enphase. You know, it's only 82% within like 2-3 weeks. So yeah, I mean, good for whoever still has Enphase stocks, as well as First Solar or Solar Edge. Here's my take on solar stocks. Yes, the world has a ton of demand for renewable energy, and producing components like solar panels and inverters and so on is kind of getting cheaper, and it's also partly due to the economy of scale that it is more affordable to more people. On the other hand, these companies are creating technology that is not too complicated to replicate for a competitor. So in other words, I believe the moat is not that humongous. That's why I'm a little bit careful with the stock, even though of course you shouldn't ignore a market sentiment and a market hype, especially if you're a day or a swing trader. And here it shows that it can rally a lot. And of course also the balance sheet, especially of Enphase, is really astonishing. Some of the crypto-related stocks are advancing quite a bit as well. We have Coinbase also being one of the stocks that were making a move. Within the last 51 days, it went up 130%, which is just absolutely mind-boggling. So energy stocks, maybe one of the last things I want to cover, are also advancing quite a bit. We have Occidental being up 2.1%, and also Total Energies being up ever so slightly, which is a stock that I'm closely watching right now. Let's see what the markets will bring for the rest of the week before Christmas. I'll watch it closely, of course. If you liked this video, please make sure to subscribe and like this video. That would help me out a lot. If you want to help me out even more, check out my broker, Interactive Brokers. If you want to open an account with them, I'd appreciate if you use my referral link in the description. I also am a big fan of Tradesviz, a trading journal that is absolutely awesome. And last but not least, I am participating in the Trading Pit, which is a prop firm challenge that promises you, of course, to work with their money and make a ton of money. Referral links are all in the description. And that's it for today. Take care, and I'll talk to you soon.